Sensex as well. Mid-caps have been about 2% higher, and we have seen about a 1.5% gain on the bank nifty as well. Reasonable amount of short covering is what you can see. All the commodity stocks and the private bank stocks, Sonia was reeling out numbers of delivery-based selling in those stocks. Surely there have been a lot of open interest short positions as well in those stocks. So Yes Bank, Axis Bank, all of them seeing a decent amount of short covering at this point in time. But are these levels to buy or sell? Are these levels to get scared and not add to your portfolio? Just preserve capital and take away what is there? These are the questions that will be bedeviling both fund managers and HNIs and retail investors. To get some guidance, let's call the veteran. Our market master for the morning, Vibhav Kapoor of IL&FS joins us. Good morning, Vibhav. A lot of responsibility rests on your shoulder. People are really looking for advice at this point in time. But really, should one think of the long haul and look at these as attractive levels? Or should one really get scared with yesterday's whipsawing fall?
Good morning, Lata. Yeah, these are actually turbulent times. But one thing I think, and I can answer straight away, is these are not levels to sell. Not particularly in India, where things are really, the macros couldn't have been better. And the fall in oil prices, commodity prices. And I think more than that, there is now a deflationary fear in the world. And that, in a way, is good for India because it will bring inflation down. And therefore, you can see going over the next 3-4 months, 6 months, much more scope of interest rate cutting than it was, say, about a month ago. So we revised our target of interest rates going down instead of 25 basis points, maybe 75 basis points to 100 basis points. So all these are really, really positive things as far as India is concerned. India is going to definitely stand out as the best emerging market. But having said that, it doesn't mean that markets cannot go down further from here in the short term, because there is a global panic which is happening, number one. And when global panics happen, all markets tend to suffer. You may outperform in relative terms, but you can still go down in absolute terms. Secondly, I think, and that's something to ponder about, is what are the global markets saying? I think they are really wondering whether the world will enter into a recessionary situation because of China. Now that is a question which I think it's too soon to answer, and only time will tell how things pan out. But definitely from here onwards, I think every decline is an opportunity to buy as far as India is concerned.
Okay. Vibhav, hi, good morning. Actually, I was coming to that point, whether you should buy every decline. And since you did say that an investor should look at every decline as a buying opportunity, what kind of, an upside do you see for this market now? Do you think the upsides have been restricted because of the global problems that beset us? Or do you think that because India has its own macro positives, the upsides will continue to be the 15-20% per annum that people are expecting?
Well, in the short term, the upsides are definitely restricted, much more than they were earlier. And as I said, while we are saying that you should buy at every decline, it doesn't mean that the markets are not going to fall from here. So over the next maybe 3 weeks, 4 weeks, or even maybe a couple of months, you could see further downsides if the global markets continue their panic, bad news keeps on continuing from China. You could definitely see more declines. So you have to now look at your portfolio from a slightly longer time perspective than earlier. So, for example, if you're saying, oh, the Nifty will become 9,000 in, March 2016, maybe it will not now. Difficult to say. Or if you keep on buying at lower levels, and I'm just giving some figure, I'm not saying the market will go down to that level, but let's say it goes down temporarily to 72, 7300, and you are buying there, then your upside, even if the market were to go back to 8,500, would be substantial. And you have to look at probably now from a 2017 point of view. And I think once all this settles down, and if you have averaged your buys at lower levels, I think you will still get a decent return over the next 18 months.
Okay. Well, Vibhav, I know that you're the man who invests for the long haul, that you're a fund manager, but nevertheless, it is the trading community that is in tatters at this point in time. Their psyche is in tatters. What is the sense you're getting? Because we are in a expiry week, this week still could be treacherous, or are you getting a sense that we are somewhere near the bottom?
I think it could still be treacherous. Again, it depends on how the global markets behave in the next 3 days, if we are talking only till Thursday. If the global markets stabilize or go up a little bit, then maybe the problem may not be so much. But if you again have a decline tomorrow in the global markets, then obviously you are going to face a lot of problems over the next 2-3 days. Having said that, I think in the very short term, about 7600 is definitely a good support level. Over the next 2-3 days, you wouldn't think the markets are going to go down below that. But hopefully, if the global markets stabilize even say tomorrow, just one more day, then I think this expiry can pass without any further mishaps.
So what are the stocks or sectors where there are good opportunities at this point for the longer term investor?
I think everywhere, except for commodity stocks, where while they have gone down a lot, maybe for a very long-term investor with a 3-year, 5-year horizon, even commodity stocks can look be good right now. But over, say, the next 15-18 months, apart from commodity stocks, I think everything is a good opportunity, whether it is technology, it is pharma, it is banks, private sector banks, or even the capital goods, engineering. I think everything is a good opportunity.
But that is the problem, isn't it, Vibhav? Most of these public sector banks have been falling because of their exposure to the commodity companies, because of their exposure to steel and steel-related products. Do you therefore still put your bets in the public sector banks?
I think you should be investing some portion because the government is taking a lot of action, and hopefully they will take more action over the next 6 months. Maybe to start with, the public sector banks can form a very small portion of the portfolio, and then as the markets keep on coming down, if they do, then you can increase your exposure in those at lower.
Okay. Well, this is a slightly way out question, especially because we are living in such turbulent trading times. But forgive me this digression. This payment bank seems to be a bit of a revolution, considering the big money bags who have been allowed to invest in this space and the fact that all the telecom companies are there. Are you playing it from a market perspective at all?
It's a little bit, still unclear as to how this will pan out. But my sense is that if you're saying that will it impact the existing public sector banks in a big way, I don't think so. But it will definitely be very, very positive for the economy as a whole over the next 5 years, because it will take banking to very, very small villages and rural areas and bring a lot of the economy which is not part of the official economy into the mainstream.
No, what I mean is, will you buy telecom companies, for instance?
Well, there are many other factors in telecom companies. I think this is going to be a very small portion of the business for some time to come.
Okay. By the way, just keep an eye out on the market. It's giving up quite a bit of its early morning gains. So now the Nifty is off about 60 points from the highs of trade and has swiftly moved to the low point at 78.56. And just watch out for some of these heavyweights like HDFC, Bharti Airtel, Kotak Mahindra Bank that are coming under pressure. All of these stocks are now quickly sliding to the lowest point of trade. Vibhav, just coming back to that point we were making about the uncertainty as far as the global space is concerned, you would not compare this in any way to the fall that we saw in 2008, and you would still believe that India is in the midst of a big bull market?
Well, on the first point, definitely not. I don't think we are in that sort of a panic where institutions will fail, etc., as happened in 2008. But having said that, I think the emerging markets in general are still going to have a very tough time. And I would say you could see maybe another 10 to 15% fall in the emerging market as an overall category before things sort of bottom out. And you could see maybe some further falls even in the US market. For whatever it may be worth, I think what we are looking at is about 1800 as first stage on the S&P and maybe 1700 as a final bottom on the S&P. And another 10 to 15% fall on the emerging markets over the next 6 months. Once that happens, I think then you would be ready for another big up move as far as the global economy is concerned.
Oh, now that's quite a fall you're expecting. We can't stand out, can we?
Well, as I said, we'll definitely outperform. So let's say if you have a 10% fall, and mind you, what I'm saying is a 10% fall in US dollar terms, or a 15% fall in US dollar terms. So in actual local currency terms, it may be half of that or something like that. And if we outperform that, then we could be even 50% of that. So I'd say in a very bad situation, maybe, as I said earlier, markets can go down to 70 to 7,300 levels if things really turn out ugly everywhere. But India is definitely going to outperform. There's no doubt about that.
Okay, by the way, it's getting very tricky for the market now. It's absolutely flattened out, and the mid-cap index has actually moved into the red. So, all of those short covering gains have completely been overturned to their back. And now we're seeing cuts come in on many stocks. GAIL is down 4%, NTPC is down 4.5%, HDFC is down 2%, PNB, Bajaj Auto, Hero MotoCorp. So, yes, this market the texture of this market has changed from a buy on dips to a sell on rally, and that's the worry that we had after the big collapse we saw yesterday. Vibhav, do you think that just for the very near term, every rally that we see will get sold into, and is that the way that one should approach the market, just for the near term?
For the near term, yes, but I think this immediate fall, what we are witnessing in the last 3 minutes, as you're saying, I think is more related to the expiry than anything. And therefore, that needs to get out of the way. And then after that, things might be a little better.
Okay. Are you safer in pharma and IT at this point in time, or you think no, economy stocks is the way to go?
Well, you would probably, as the markets go down, you would increase your weightage in the economy stocks. But having said that and saying that, global emerging market currencies are going to remain weak and interest rates are going to go down, which means the rupee has to depreciate. And actually, it's a good thing if the rupee depreciates a little bit more so that your exports remain competitive. Otherwise, things are going to be difficult. And in that condition, I would say definitely the IT and pharma stocks will do reasonably well. So you need to have some weightage there also.
All right, Vibhav, we'll leave it at that. Thanks for joining us. That's the word coming in from IL&FS. This is a volatile market, but 7,500 to 7,600 could be the support on the Nifty in the near term. Well, we'll do one thing. The market is all over the place. So when we come back, we'll speak to a veteran of the market and someone who's been through several cycles with a calm mind.